Hello. Um, in this session, we try to see how do you choose your stock. Okay, this is a general question. For example, you want to trade and you want to choose your stock. Now, first, what you should do what we call your homework. Homework, it means you search for the stocks according to your plan. According to your plan, it means what are you looking in a stock? There are a lot of kinds of stocks, but in general, I can give you two things you can look at. Some, they are called runners, others are slow. Okay? Now, runners are stocks that go up or down quickly. So quickly, what does it mean? It means if they go up, you will see that they move very fast. They move very fast. They move like $1, $2, $5, $8 a day. Some they are very fast. But the problem here is that they go up like this or they go down. So they are more, there is more risk here and more reward. Because the more risk you do, the more reward you have. Or if you lose, you will have like more loss or big loss than usual. Now those stocks here that are slow, you can see them. You can just take any list of stocks and check them on the chart or something. You find a stock, for example, that it is going like with some cents, like 5 cents or 10 cents, 25 cents. And sometimes you find they are big. They are like, you find, for example, 45, a stock with 45, but when it moves 10 cents, 25 cents. It's so slow. It doesn't go that fast. But here, runners, you find that the stock is 20, but in a day he can get 23, 25, 28. They go very fast. And most of the day traders they try to see those stocks, those that run too fast, in order to have more money from them. Now the slow one, most the people who use these slow things are the investors. Okay, the investors use these stocks because they don't care about how much they go. What they care is the stock is going up through years, okay, of investing, years. So they think about years. Now, like these, some people like day traders, they think about the day. They don't think about the years. They think about the day, how much money they can get from this. Most of the people who go to this, they are like day traders or swing traders. Okay, for me, I am a swing trader. Okay, I don't day trade. Okay, when you day trade, you should have the whole day, and you should follow a lot of news. You should do a lot of search before you do your trades. For me, like day trader, like a swing trader, I do my research and I choose some like some stocks, and I buy for so they are like I choose always those stocks that runs fast, or quick than the other ones. And how do you know about them? You just check them on the chart. You can have a list of stocks. You have a list like this. Put them in your chart and see. For example, if you are like me, like you are a swing trader, you should see day by day, like day, then the next day, third day. For example, here it's like 20, 22, 25, 26. For example, it's going up. So you buy it 20 after 1, 2, 3 days. This is the day you buy. After 3 days, 1, 2, 3, you can have $6. $6. If you buy 100 shares, it's $600. $600 in 100 shares. Now, if you buy 300, 500, 600 shares, you will make a lot of money like this, a lot of money. But be careful, if this stock goes down, for example, it is 19 or 18 or something, you should just quit. You should get out from this stock, because they are very, very fast. From 20 it can go to 16 in 1 day or 2. So it's either ways. So you should be careful. If the market goes against you, you just put your stop loss or something and you sell the stock. Okay? So now this is what they explain here is a general thing. What we say runners or slow stocks. But if you go to what we call sectors, what do you mean by sectors? It means in the market, in the whole market, you go and you find sectors. Sectors, it means a lot of stocks, a lot of companies grouped together. For example, you go to discount retail. If you go to discount retailers or retail, you find some stocks. Most of the time, they have the same characteristics. The same. It means when they go up, they are not. For example, they are not so fast. They are not fast. Now, if you want some that are fast, you can go, for example, to another. Not this sector. You can go to another sector. For example, pharmacy or healthcare stocks, drugs. Okay, you can go to these sectors, pharmacy stocks or healthcare stocks or drug stocks. There are a lot, so it's impossible to list the sectors. There are hundreds of sectors and hundreds of industries in the market. So there are thousands and thousands and thousands of stocks. So you should try to find for a sector that it is suitable for you, and choose the stocks that are fast. They can go up and go down very quick, and then you buy and you sell as you like. And there are some stocks that like pharmacy stocks. They go like they have sometimes break out. Like for example, it's 20. and sometimes in another morning you find it is 30, or you find it 20, it becomes 10 in one day. This because this all this pharmacy, drugs, and something, they have a lot of traders, big traders in it, and they manipulate these stocks very easily because of the news. Okay, the news. For example, after the markets closes at 4 p.m., if there is a news after this and it is good news, maybe this stock goes from 20 to 30. So if you are going to see good things, you should see the news after 4, and you can buy it after this the market closes, and do your research. But for these stocks, they are very, very risky. Okay, as I said before, they are very, very risky. So you should be careful. Be careful when you go to trade these stocks. Okay, and some stocks which go nowhere, like the finance stocks, like banks. These stocks, most of the time you see them like this. They go up, they go down, they go up, they go down. Or sometimes they go up for a little bit, they go down. It means depending on the situation of the economy and the banks. They have these years from 2008 until now, 2013. A lot of banks, they go down. They lose a lot because of the crisis, like the housing crisis and the global housing crisis in America here, where the stocks go down. And you can check some banks or some finance stocks that you find them going down for too much, and some companies, they lose business, some they go bankruptcy, so they disappear at all from the list, from the stock market. So this is how do you choose your stocks. Now, wherever you have a strategy or a plan, whatever strategy you have, you should choose the best stock that suits your strategy. Okay? If you are trading for the long run, you can choose whatever you want. But for trading, since you trade for a short time, like for example day trade, you should choose stocks that have volatility. It means each day you see that from the opening to the close, there should be a lot of play, a lot of dollars here from open to close. For example, it can open by, for example, 40, it can go to 45. So day traders, if they bought like 40 or 41, and he sells at 45, 44, he will make a lot of money, since those guys, day traders, they buy a lot of shares. They don't buy like 100 shares. This is not day trading. If someone is not having like enough capital, maybe, but big traders, they use thousands and thousands or hundreds of big stock. Like if you find a stock that it is 300 or 700, and he buys like 1,000, 2,000 of these stocks, okay, a share, believe me, he will make a lot of money. But if the stock is against him, he will get out with limited loss. So this is for today, for the how do you choose your stock. So whenever you want to choose, you should choose according to your strategy, what you are looking for. But in general, we have, as I explained to you, two kinds of stocks: runners and slow stocks, and you should choose the best for you. So you can go just and search for the stocks and see them on the chart and see how do they behave. Okay, if they are very fast, you can use them, or if they are very slow and you want just to keep them for years, companies that you search for, so you do whatever you want. Okay, thank you very much. If you have any questions, just ask.